Press subscribe.
Press subscribe.
Press the bell.
Press the bell.
Press like.
Press like.
Change your life one word at a time.
So, good morning and morning to you. My name is Mr. Lilly and this is my investing channel. Now, we've got lots of things to talk about because the inflation's high. We're going to look at what to do when inflation's high, what to really do to have a balanced portfolio. Because if you want to have a real balanced portfolio, it's about thinking about inflation, investing and interest rates and how they affect your stocks. But we know we like to start our day right with our daily affirmations.
I'm smart, I'm beautiful, I'm strong, I'm wise, I'm powerful. It's going to be a good day. Thank you, Jesus. I'm black, I'm proud.
But people, and all May born, it's my birthday. So my daughter wanted to sing me happy birthday.
Happy birthday to you. Happy birthday to you. Happy birthday to you, Daddy. Happy birthday to you. Hip, hip.
Hooray!
Hip.
So, thank you very much, darling. So, it's actually bank holiday. So, the stock market's closed in England and in America. You got a different bank holiday there. So, what to do when it's a bank holiday is always to research. So, let's have a look. Because we're going to look at interest rates. We're going to look at a few stocks to watch. And we're going to be quick. So, we can see interest rates, inflation rather, surges to 13-year high. But before that, actually, I hope you're keeping healthy. I forgot myself. I've got my Irish moss, got my sea moss. Hope you're keeping healthy. So, sleeping right, eating right, and all of that good stuff. But inflation surges to 13-year high. Now, normally, we could think inflation is good for stocks and stuff. But we can see here, if we look through history, actually, because most people think inflation is good. But question, is there a correlation between inflation and stock market? So when inflation is high and commodity prices are rising on what seems like an almost daily basis, have you ever wondered how it might affect the price of stocks? So this is what we're going to be looking at, actually. So we can see here, where are we? So inflation was all-time high. We got this one here, I believe. How to profit from inflation we'll be looking at. So for consumers, inflation can mean stretching a statistic paycheck even further because inflation is when prices are rising, isn't it? So consumers is us buying people. We go shops for things are costing. So bread is costing more. Milk Way is costing more. Remember Freddos used to be like 10p, they're like 30p. This is inflation, crazy inflation. And the government has a target of between 2 to 3%. So right now, you can see America is above that and things. So this is what happens. Let's see. So inflation is the base of inflation. Yeah, we said about things going higher and how they measure it. But however, inflation does have a positive side when looked at from an investment standpoint. Real estate is a popular choice because real estate houses, if price is going higher, then your price of your house is going higher. So that's a good one. Commodities. This is where we'll talk about Bitcoin and other things because that's why people go to gold. From historically, gold for centuries, the leading haven has been gold. And to lesser extent, other precious metals. Investing tends to go for the gold during inflationary times, causing the prices to rise. So this is what we're talking about balanced portfolio. Technically, you would not just have that, because sometimes people talk about large caps, medium caps, so the size of the actual company you're going for, and growth stocks and small caps and having big companies that pay dividends. But really, you also want to be thinking about companies that do well if inflation is high or when interest rates are rising, things like that. And we can see. So, but commodities especially, so commodities do well as like gold for when inflation is high. Got ones like oil, cotton, soybeans, orange juice, like gold. The price of oil moves with inflation. Cost increase flows through to the price of gasoline and then to the price of every consumer good transported by the agriculture produced and raw materials are affected as well as automobiles. Since modern society cannot function without fuel to move vehicles, then bonds. Investing in bonds may seem counterintuitive as inflation is deadly to any fixed income instrument, but often causes interest rates to rise. However, to overcome this obstacle, investors can purchase inflation index bonds in the United States. Treasury inflation protected securities tips are a popular option pegged to the consumer price index. So this is why when people are turning to bonds, when investments in stocks are too risky, when stock market's crashing because inflation is high and investors don't know what's going to happen with the interest rates, they've been turning to bonds. And the more they turn to bonds and take out the money from stocks, the more they'll take out the money from cryptos and things because it's too risky, especially when crypto has been crashing or correcting for the last 2-3 weeks. So we'll be looking at that. And then we can see, but stocks have a reasonable chance of keeping pace of inflation, but when it comes to doing so, not all equities are created equal. For example, high dividend paying stocks tend to get hammered, like fixed rate bonds in inflationary times. Investors should focus on companies that can pass their rising product costs to customers, such as those in the consumer staples sector. Loans as debt obligations, leveraged loans are potential inflation hedges as well. They are floating rate instrument, meaning that banks and other lenders can raise the interest rate charged so that the return on investment ROI keeps pace with inflation. So mortgage-backed securities, MBS, pros and cons. So this is tips to profiting through inflation. Now, how do interest rates affect the stock market? Because if inflation is like the only tool governments have and monetary policies have, banks and Bank of England and stuff have to tackle inflation's rising interest rates, because you want to encourage more borrowing or spending. When interest rates are low, people borrow more, there's more spending, you're thriving the economy. When interest rates are high, when inflation's high, then you higher interest rates to try and encourage less spending in a sense, and to try and get the prices to maintain and balance, because if you keep spending, more prices going up. But let's see. So when the Federal Open Market, which consists of several governors, bank included, and while it usually takes at least 12 months for a change in the interest rate to have a widespread economic impact, the stock market response and change is often more immediate. So we can see the interest rate that stocks impact. Interest rates that impacts the stock market is the federal funds rate, also known as the discount rate. Federal funds rate is the rate depository institutions are charged for borrowing money from the Federal Reserve Bank. The Federal Reserve makes adjustments to federal funds, so that's what we do. But what happens when it rises? When the Federal Reserve increases, the discount rate is not directly impact the stock market. Only direct impact is that borrowing money from the Federal Reserve is more expensive for banks. The impact is due to the fact that any increase in the discount rate have a ripple effect throughout the rest of the economy. Because it costs financial institutions more to borrow money, these same financial institutions often increase the rates they charge their customers to borrow money. So individual consumers are impacted through increases to their credit card and mortgage interest rates, especially if these loans carry a variable interest rate. When the interest rate for the credit cards and mortgage increases, the amount of money that consumers can spend decreases. Consumers still have to pay their bills. When those bills become more expensive, households are left with this less disposable income. Businesses are not just impacted indirectly due to a decrease in consumer spending, they also impacted directly because they also borrow money from banks to run and to expand their operations. When the banks make borrowing more expensive, companies may not borrow as much and will pay higher rates of interest on their loans. Less business spending can slow the growth of a company. It may curtail expansion plans or new ventures, or even induce cutbacks. There may be a decrease in earnings as well, which for a public company usually affects the stock price negatively. So this is what is scary times when inflation is high and people are worried about FUD. So FUD is fear, uncertainty, and doubt. So when interest rates are high, people worry, oh, what is the Fed Reserve going to do? They're going to interest rates, and that's normally what they do, and it can affect their stock prices and their business running. So what else have we got? We can see historically as well. So I think this one here was looking historically. Where was that chart? So historically, they had this one here. So we can see over the years, you might not be able to see that good, but this is from 1919 all the way to 2010. And the red one is the stock market, and this is inflation. So we can see unfortunately, in order to get the true picture, you need to see the actual level of the market returns minus inflation. But before that, we can see the true measure rate of get to call the real rate of return. Where was ours? There was one part that is, so in the years between 1930 and the end of 1910, they averaged 9.8% inflation. That is a high annual inflation rate. The stock market, on the other hand, generated just over 5%. In the 1920s, which is the period in question, the annual inflation rate was virtually non-existent, actually slightly deflationary at less than 0.1%, and the stock market soared. So when inflation was low, stock market soared, although technically that was deflationary. In the 1930s, the stock market had a bad decade and basically finished where it started after dropping like a rock. So from this chart, you can see that there doesn't appear to be a correlation between high inflation and high stock market returns. If anything, there might be an inverse correlation, the stock market doing better during decades when inflation rate is below 3%, with the exceptions during the 1930s. But a real rate of return, because what you have to really see for your money, if the real rate is when you minus inflation, because even if you made 10% return and inflation is 3%, then you don't really have 10% more buying power of your money. You have to minus the fact inflation and things to use your money for cost more. So that's why your real rate of return when you're looking at investments is when you minus inflation from it. So this chart here, so they've minus inflation from that. Because these are, so as far as inflation in the stock market goes, the best real returns come when inflation is moderate, around 2 to 3%. When inflation is higher, the economy is sputtering. Often when it is lower, is because the major economy train wreck. But as we saw in 1930s, bad economy doesn't necessarily mean a bad stock market. One factor not considered is the effect of taxation on your gains. For instance, in the 1970s, you would have to pay taxes on your 5% gain, even though in real inflation adjusted terms, you actually had a loss. So this way, high inflation can actually cost you twice. First in loss, purchasing power, and second in taxes, phantom gains. So high inflation is not good for us at all. So what we're looking at. So like we said, people are looking at other things. So we can see stocks, AMC. Now AMC is an update. Before we were looking at AMC a few weeks back, or months back in January. You can see the short squeeze is still going on. Many MC bulls are hoping to ignite a short squeeze by coordinating their purchases and driving up the stock price. They're hoping to force short sellers, because we can see what's actually happened. So AMC price, here we are from May. It was around here. It surged to $25. See me, I made crazy profit. I took that profit I made out, because I lost lots of profit from crypto and all that from the dips. So me, I'm not getting married to much stocks or crypto. I'm still long term, but I'm making profits real. If you don't make the profits real, because this part of your portfolio, I've decided I have to buy low, sell high, and then keep going in and out to make those profits real, basically. Because if you just, there's still the long term ways of just holding it and keeping it for 5 years and you make what you make, but there's money to be made in between as well. So we can see AMC's high. Some people believe because crypto has crashed, many people are turning back to these meme stocks like AMC, GME, and things like that. So the movie theater chain has replaced GameStop as the most popular stock in the infamous Wall Street Bets Reddit forum. And that was originally the group on the internet that said, oh, we're just going to, they saw there was a big short squeeze on this, a big short, because normally it's 5% for shorts. But they saw this company had bigger, like 40% at one point. So they all decided, if we just buy, the people that are borrowing to say it will sell, it will, price will lower and plan to buy later, short sellers, they will eventually, if the price doesn't go down, they'll be called to buy it. So what actually happened was AMC did lose 1.2 billion loss for short sellers according to data, because the maths is working. People that just decide to buy it and are loving it, if they hold and don't sell and the price goes up, people, margin call will come, and those that are saying they would have bought, they're planning for it to go low, bought shorts, and then the more they have to cover their shorts, the more the price will go up. So it is amazing, amazing, amazing. But some will say this is not still ones to buy, because the books do not match what they're making, and some believe they still cannot make cash. They are still not able to get enough people to the cinema to make real cash right now for their business to be a reliable thing to invest in right now. But we can see, if you believe in fighting the hedge funds and people, and you believe in the fight and believe in the maths, it is one to watch, and GME and stuff. But real things to also look at are, we've got like top. So growth stocks people look at, because even with inflation stuff, some people still plan for growth stocks in years to come. So Tesla's one to watch, because how Tesla does will affect all these other growth stocks. But we can see some avoiding, like Fastly. Fastly had a crazy drop in 2020. It was a hot stock to watch in 2020, but had a crazy drop. But some people believe it dropped too far. For this reason, it's a good time to get in there. So you can see Fastly's one to watch. You got Zscaler next on the list, top cybersecurity. Says Scalar stocks, another top growth stock that has been investors raiders on the late. You've got BioNTech, next generation immunotherapy company pioneering novel therapies for cancer and infectious diseases. We got Palantir Technologies, a developer of software and analytics tools for the defense industry and large corporations. Ones to watch. And Viacom CBS. So they are conglomerate that is headquartered in New York City, in essence, in the mass diversified multinational mass media content to audiences across additional ones to watch. So we've also got some other ones to watch in June are cyclic stocks to consider. So one of them was Walt Disney Carnival Corporation, and United Parcel Service. So UPS is a multinational shipping. I think you order UPS. So you have to, of course, it's not financial advice. You have to do your own research. But some 5 tech stocks people are saying to watch. You got PayPal is definitely one, because PayPal is an online payment system that is used in majority of countries that support online money transfers. Companies committed to democratizing financial services, and recently, well, not recently, but they even allowed you to start buying crypto. So last month, the company announced the launch of crypto as Venmo. This would allow for Venmo's more than 70 million customers to buy, hold, and sell cryptocurrency. So you got Twilio as well, another top company in their focus. New world would be Twilio in brief. Twilio is a San Francisco-based tech company that provides cloud communication services through its platform as a service model. What else have we got? So we had Twilio, we had PayPal, we had Roku Inc., tech company that essentially pioneers streaming for TVs and essence is an advertising business, and its streaming devices are often access to streaming services like Netflix. So we've also got Salesforce, is a cloud-based software company headquartered in San Francisco, California. Another one on people's radar, Virgin Galactic. So this done crazy things last week as well. Really nice percentage just last week. Virgin is a space flight company that develops commercial spacecraft. Company aims to provide orbital space flights to space tourists in the near future. Also is a vertically integrated airspace company and uses proprietary and reusable technologies. So these are very interesting ones to watch. And then we've also, on crypto, we see Bitcoin is struggling. This is the 200-day average. We can see since 2001, since this bull run has been happening, it's always been above this 200-day average. But now it's using it as support. It's rejected it. So this is a very dangerous time, because you can see from here, there's no great support apart from back to our previous all-time high at 20,000. So that's why it could literally drop to 20,000. It's fighting here. So you can see there's some kind of support level it's creating at its current 36, 35,000 It's kind of creating a support there, but it's not a real support. But it is scary times for Bitcoin. And we can look at this chart. So even the 21-day average is way below the 21-day average on the weekly chart. So it is interesting times. It is fighting, but we know it will recover. We know crypto is the future. We know this is good. Things are turning digital regardless. It's just about when it will get to 100K, whether it will be this year, 2 years, 3 years. Some still say 500K. Ethereum. So check my other videos. There's still definitely ones to watch. Polygon is an interesting one to watch. Which one will recover first? Polygon, we are setting our sights on. Even Google has backed Polygon now. Google Cloud now provides blockchain insights for Polygon network. An integration with Google BigQuery enables developers to analyze on-chain data on Polygon, formerly called Matic, in a more simple way. According to email announced Friday, with the BigQuery support, Polygon's data sets have now been listed in the Google Cloud Marketplace under the public financial services category. Potential benefits of integration are said to include the monitoring of gas fees and smart contracts to determine the most popular tokens or applications on the network. Google BigQuery is an information warehouse that acts as indexer, allowing powerful data analysis. This can be performed across multiple blockchains, enabling comparison between networks or the tracking of interoperable tokens. Polygon says, so this is big. This is why I haven't got in the graph GRT, which has had crazy dip. So right now it's a very big discount you can get for the graph. And because of this indexing and queries, because think about getting in Google back when it launched in the internet days, you'll be nice right now. This is the same as we can see technically with Polygon, Google's link with Polygon and with Graph, because this is for the Polygon, but Graph was for all the systems, especially ones on Ethereum, being able to query blockchains, because it's not, the business is too new. You can't just go on Google and search, oh, what is the biggest gains you've got from this asset in the last week, or get real data that can help you to invest. And this is what the Graph is definitely one to watch. But Polygon, they're already big with Google joining on board, and 3 other reasons why Polygon has been growing. We can see we implemented and offered Matic plasma chains, a production ready with Ethereum layer 2 predicates based plasma implementation. We implemented often Matic PS chain permissionless. Yeah, that's what the reader's saying. But let's see. So bullish moment on Matic was picked up by Vortex data from CoinGraph, which began to detect a positive outlook earlier this week prior to the recent price highs. Vortex store inclusive to coin Gecko, where is it? So Google announcement we talked about was one reason. Cuban backs Polygon. Traditionally, billionaire investor Mark Cuban revealed investing in Polygon May 25th. Cuban explained that having a high transaction per second TPS output is highly important to lower the cost of usage for users. And what was that other reason? Where Polygon, Matic, and T in the past 7 days gave 35% in the past 7 days, outperformed every major cryptocurrency apart from Uniswap. There's several big reasons behind the strong uptrend of Matic, including the growth of hype around Polygon, Google big announcement, and Mark Cuban's investment. But we can see, so at the bottom here, let's have a look. Analyst says reclaim 37,500 is Bitcoin's crucial line in the sand. And right now we are just about 36,000. So it's crucial times. But we know it's not just about investing, it's also about investing in yourself. So I've got my book here, Divine Wholeness. You can get on Amazon. The links are below. I'm about to put the Audible version up so you can just listen in your ears. Got good chapters on wealth is stored up for you, silence and living, and soliloquy by King David Matters. We reimagine life with King David. Also got, if you've got children, you can pre-order my children book called Zimbala's Secret Gift. It's an amazing picture book. You can pre-order. And another one that will be coming soon is You Are Rich. So think about how to play the same game the rich do, thinking about capital, now to increase your capital, your working capital, and yourself, and investing in yourself to make better choices. So until next time, make sure you like, share, and subscribe.